The stock market jumped on Wednesday after the Federal Reserve raised interest rates by 75 basis points for the second consecutive month in a row, with Fed Chair Jerome Powell hinting that the central bank could slow the pace of rate hikes later this year. Markets were widely anticipating another 75 basis point rate increase from the Federal Reserve. The central bank hiked rates by the same amount at its meeting last month, the biggest rate hike in 28 years, in an attempt to combat high inflation. The Fed has said it is prepared to get even more aggressive in tightening monetary policy, last month warning that there is a significant risk that high consumer prices could become entrenched for longer. Investors will also be watching upcoming U.S. economic data, with second quarter GDP due on Thursday. Despite negative growth in the first quarter, analysts still expect GDP to rise slightly, which would mean the U.S. economy avoids a technical recession. There weren't a ton of fireworks from the Fed meeting, as a 75 basis point hike was widely expected and is somewhat of a non-event, says Vital Knowledge founder Adam Crisafulli. Amid signs that inflation could soon moderate, the Fed is getting very close to a dovish pivot, he predicts, though it won't happen until later this year until economic data starts to improve. One of the primary reasons stocks have put up miserable performance numbers this year stems from the T. For that reason, we found it ironic that on all 3 days the FOMC has hiked rates this year, stocks rallied, according to Bespoke Investment Group. The S&P 500 is down 17.7% this year, but if you had only invested in the market on days when the FOMC hiked rates, you would be looking at a YTD gain of 6.8% in just 3 days. Fed raises interest rates by 75 basis points again as investors brace for recession. Forbes S&P 500 falls over 1% aft.